Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, and welcome to the Smart Property Investment Show. My name is Russell Stephenson, obviously not your regular co-host Phil Tarrant. Phil's overseas at the moment. I was on the show recently, a few episodes ago, and I must have done something right because they asked me to come back. So here I am again, and in the studio with me today I have my friend and colleague Alex Whitlock. Now Alex has also hosted the show at times. He's also talked about the SPI portfolio that he shares with Phil Tarrant, but I wanted to get him back in today and have a chat a bit more around his own personal investing and experiences in property. So Alex, welcome back to the show.
Hi Ross, thanks very much. It's great to be back on the show. I have to say I do really enjoy going on the SPI show. Property investment, something that is very, very close to my heart. It's been very defining for me since probably about 30 years old. I've achieved great sort of success through property investing. I've done dismally badly through buying shares, but it's something that I'm very passionate about.
Something we can talk about all day long.
Yes, indeed, yeah.
And I guess, just to sort of put that into some perspective, you've been investing for around about 25 years, all up. You've got 5 properties in your personal investment portfolio?
Yeah, I've sort of I bought 2 last year in one go. So adjoining properties in Deception Bay with plans to develop, and then over the previous year, I bought another 1, and then the year before that, I bought 2.
Okay, so let's say you've obviously got your experience with the SPI portfolio. There's circa sort of 15 to 20 properties over there. Let's not get into that today. On your personal, you said you got 5 in there.
Yeah.
When did that start? Your personal portfolio, and you've got 5.
Yes.
And it sounds like what you've just said, that's all happened over the last sort of few years.
Yeah.
When did you first buy your first personal investment property?
I bought my first property I bought my first property. I've only ever bought Australian property. I bought my first Aussie property in 1998 when I was living in Hong Kong.
Okay.
I bought it off the plan from a developer that I got to know quite well while I was working in Hong Kong.
Still have that?
No, I don't. I bought a total of 4 from that developer, all of which I've sold. And I've done quite well. I think everyone has their personal preferences in terms of what they like to buy, and there's no necessarily a right or a wrong. I personally now prefer, as I've sort of gained experience and gained confidence, to buy resale properties that have potential to add value, to potentially to develop, as I've sort of looked at now.
So going back to those first ones, buying new build properties, what's your experience then? Were they successful? Did you purposely sell those to buy more investment properties, or were they for sort of personal reasons?
Well, let's talk about buying it first of all. I didn't intend to buy them.
Okay, always the way.
When I was working in Hong Kong, I worked in media back then. I was an advertising salesman, and I worked on an investment publication, and one of my key clients was a developer. So I used to sell them advertising, and they negotiated a deal where they had an advert and they would also write an article about various facets of property, and they would not sign a 12-month deal, which would have suited me down to the ground. So I had to go back and I had to go and sell to them every single month. And unfortunately, I had to read the article they'd written just to show that I had some sort of interest in what they were doing. And so I'd read about negative gearing. I would read about it was Melbourne-based properties. So there were exemptions on stamp duty at the time, and I'd read various sort of articles about sort of leveraging and so on and so forth, all the fundamentals of property investment. And probably about the 6th or 7th article and advert, and I was on my way up to sell them the 8th, and I'd unfortunately read this article that sort of triggered something in my brain. So I got chatting to them. They loved, lived, breathed, slept property. So I got chatting, and they had the model in the middle of the. I don't know if you've been along to a developer, they got the model there in the middle with little tiny people and so the plastic trees and all that kind of stuff. The impression of what it will be like when it's built.
Enough to excite anybody.
So I got chatting, so going through the article with my view of sort of selling an advert, and then the cogs sort of started turning. I think it was the article had been about capital growth and sort of the well-worn sort of story of Aussie property doubling in value every 8 to 12 years and so forth. And I just got talking to them. I said, so how much would and so the finger sort of pointed around to the model and the eyes focused, and I started asking how much certain units would cost, and then I was going, oh, you know what? I reckon I could just about scrape together, because I'd saved some money in Hong Kong. I thought I could just about scrape together a little bit. I could scrape together a deposit. So in those days, it was 20%, and you'd need an 80% mortgage. Off the plan, as you'd know, this isn't built yet, so you put down a securing deposit, and then you pay the deficit once the property's completed.
Yep.
So yeah, that was a process, and then the next thing I know, I'm stumbling out there, head spinning, filled with excitement.
So you've obviously you know these guys. You've seen the
Yes.
seen the property. You've been reading obviously about their obviously sort of investing strategies and
Yeah.
what have you. Did you research anywhere else? Did you go? Let me have a look at.
Of course not.
I'm going to buy.
salesman.
I'm going to buy this property
I
over
do
here.
think
But before I go and do that, let me just go and check elsewhere if there's any other better deals or any other. You just went steaming in.
Why would I do that? No, look, you know what? I trusted them, and one of the great things about property is the fundamentals are so simple that even someone like me can understand them. It's not complicated. And so just to look at that first purchase, I mean, and to answer your question sort of originally, yeah, it was all the apartments that I bought from then grew in. I sold one, which was a sort of a forced sale when I first actually came to live in Australia, and I lost 10 grand on it, and the market had dipped, and they'd said you want to hold for a minimum of 3 years, and I sold within that 3-year period because of sort of various pressures. But the other ones all went up in value. Some of them doubled in value. So my observations were that the capital growth on those apartments was very, very good, but the cash flow, the yield was not good. And one of the things that I learned through that process, and why what's led me to invest the way that I invest now, is they're lovely looking apartments. How you drive down the South Bank and sort of go and visit them, and sort of drive past and think, what a fantastic place.
It's great in a glossy brochure.
But it looks great actually. The buildings are great. They've got a concierge, and the thing is, and they have gone up well in terms of value. But you work out for yourself that a multi-story apartment block with lifts to maintain, and with a concierge, and with tennis courts and swimming pools, and so on and so on and so on and so on and so on, ends up eroding the yield that you get. So yes, I made good, because I sold them. I didn't get a very good return in terms of a yield, but I got good capital growth on those apartments.
Okay, so 1999 you bought your first one. The second one was when?
So I bought another one in 2000, and then I bought another two in sort of fairly quick succession after that.
And all off the same guys?
The same guys, yeah.
Okay.
Yeah. And I leveraged, and I was able to leverage off the first one to sort of release equity, to sort of make other purchases and save a little bit more money. The first investment was very good for me because I'd saved a bit of money. The apartment that I bought was $219,000 for a 2-bedder in the South Bank, which gives you some sort of perspective on the growth there. So I saved $21,900, which I paid as a 10% deposit, and then I had another 18 months to save that money. And in today's terms, it doesn't sound like a great deal of money, but it was, it was a lot of money. Myself and my wife had to save very hard. We had to do without, but it was a very good exercise for me to go through, to budget, to think about the end goal, and then and then to scrape together the money, and eventually get an 80% mortgage and settle.
And generally the experience, not necessarily buying with capital growth in mind, but just the actual holding the properties and managing the properties. Did you have any issues? I mean, look, bear in mind they're new build, so you shouldn't have things packing up and
no maintenance issues.
No gaps with tenants. Tenants always in there.
No, they look, anyone who invests in sort of high density apartment areas, particularly new developments, you will get and end up with a glut of property as developments are built, and the developer and then the subsequent management firm that take control of those leases try to fill up that capacity, because it's a sponge that that can be very dry, and you sort of soak up the immediate tenant, and then more apartments are built, and you just don't have the demand. So you can end up with a bit of a glut, and I've been through with those apartments. I've been through cycles of having to drop the rent, which is quite heartbreaking, but it's an education, and it's something every investor needs to get used to, because it happens. You have the naive belief that you're going to get continual capital growth and you're going to get continual rental growth, and it just doesn't work that way. So it wakes you up to the realities of the marketplace.
Yeah, I mean, it's admirable. I'm thinking sort of you're buying from overseas. You said you were in Hong Kong at the time.
Yeah.
So you're in Hong Kong and you're buying overseas property effectively.
Yes.
Now there's a lot of people, that you speak to that can't even get over the sort of barrier of buying in Australia or even in their local area, because of that fear. And how did you get around that in terms of holding a property in an area that you've never been to or experienced? And
because it is an investment, and whether you're buying shares in, a big four bank or buying property in the South Bank, or it's an investment. You look at the fundamentals of growth, obviously, there's a level of trust. You've got to remember that with these guys here, I trusted them. Yeah. I trusted them. I had a relationship with these guys.
So from that moment, from that moment where you've gone, right, I'm going to go and I've got my interest now in this in this property. How long before you then said, right, I'm going to go and did you ponder it for 6 months? Or was it a 2-week period, and then all of a sudden you turned up with your deposit? How quick did you?
30 minutes.
Yeah, right.
Yeah, I stood there and went, it was a 30-minute process. Having like I say, having read the 6th or 7th article they'd written. I'm a man of impulse, and I made the decision within about 30 minutes.
And that's very different to most people.
Very different to most people. But you know what? I'm a very strong believer in action, and I think that so many people sit around and wait for the perfect time.
Absolutely.
And over-research. And I please, don't make snap decisions necessarily. You've got to remember, I had been reading the articles for quite a long period of time. I had been talking to these guys. I had absorbed a lot of the fundamentals of not only investing but in investing in that particular area. So on the one hand, yes, it was a 30-minute decision, but on the other hand, I ran an investment publication. I had a reasonable idea and understanding. I didn't intend to buy property, but I'd absorbed a lot of the I'd absorbed their passion, because these guys, yes, they were selling property, but they absolutely loved it. They just loved property. They invested themselves, so that I absorbed a lot of their sort of thinking. But I think that, there are times where you just have to do rather than to think and rather than to plan. So yes, I had a good fundamental. I personally felt I had enough information for me to make an investment decision.
Yep.
And also, I thought, I'm going to buy this property, and the information I've got suggests that they will go up in value. Like I said, what I didn't really understand at the time was the importance of the yield, but that's been a learning process with this particular type of apartment.
Sure. So you mentioned at the start that your sort of strategy and mindset's changed from buying new properties to the resale properties.
Yeah.
When did that occur? Talk me through sort of holding these sort of 4 new apartments, and then how you transitioned and why you transitioned, and the thought process behind that.
So just give you a bit of so my experience was I bought these apartments at the time. I'd just got married, got a very young family. My son had just been born, and I'd never saved any money. I'd never had any money as such. I always blasted it like any good young man should. So I went through this change of suddenly owning an asset, with my family, having a son, and I went through this bit of an awakening of creating a better future for myself and not relying on a high-paid job or inheritance or winning the lottery. And it was a real sort of just an awakening that I had some power over my own future. And I started the first property I bought, like I say, was $219,000. I ended up with a portfolio of the next one I bought was a 1-bedder for $169,000. And then I bought another 2-bedder, which was gone up by that stage in terms of, there were slightly bigger developments. That was a $300,000 development. And then the next one was $320,000. So I suddenly started to have quite a significant, amount of assets, yes, with a lot of leverage on them. But I sort of went through this sort of journey of and I saw them go up in value. When I came to Australia, because there was, I needed to look at sort of buying a place for myself to live in. So I had to then sell those down. So I kind of had a bit of and I bought another one when I first came to Australia. I bought actually a new build in a suburb called Manly in just outside of Brisbane.
Different developer?
Different, yeah. This is a little townhouse, which again I wish I'd hung on to, but I bought that for $200,000, something like that. Be worth. I've tried to imagine what it'd be worth now. Right. But look, so part of my journey was that I had a young family in Australia, so I needed to sell down. I sold down to end up with 2 of those original developments. I sold the Queensland property and the other 2 apartments to buy my own house. And then I had a bit of a hiatus, sort of left investment for a while, focused on work, sort of went into business with Phil. And during that time, we then launched SPI back in 2008. And again, then my education started again through working in the media and starting to, the reason we launched SPI is because of my experiences with property. Phil also hadn't bought at that stage, but Phil is really property orientated. And so we launched SPI, and then we decided that as part of the SPI proposition to our audience is that we want to just showcase how we bought, what we bought, and our strategy. So then we went into the SPI portfolio, got a buyer's agent on board. I won't talk too much about that because obviously Phil covers that a lot in his podcast, but it was really an education process. It was part of my understanding and looking at the analysis of the yield that I'd got, through the apartments and the big overheads, through sort of Body Corp and so forth. So then, I looked at resale as an investment. I also, as I was on a visa when I first came here, so until I was a permanent resident, I couldn't actually buy resale property as an investment. I could buy to live in, but not as an investment.
Okay. So you've bought 2 properties last year?
Yes.
Okay. So you've gone from the new build to the resale. What were the resale properties that you're buying? What type areas?
Yeah, so it's really sort of continuing on from my experience with sort of building the SPI portfolio, the investment action portfolio. So, but sort of before I go into that, I'll just give you a bit of understanding as to why I started to build a little separate portfolio. So, I'm in my early 50s now, but I'm now in sort of probably hopefully my final sort of place of residence. I've got a reasonably large mortgage, so I've got a $2 million mortgage on my property, which is very large. I bought it with just basically a 20% deposit. So I sort of, at the age that I'm at now, and with the SPI portfolio being separate and something that Phil and I, have as part of that publication that we're not going to touch, I thought to myself, well, I want to start now to try and sort of drill down on the mortgage that I've got on my principal property. So I bought a boat, which I sold, which...
Good investment?
You know what? I actually made money on it, would
you
you believe? Yeah, I did,
Bloody
yeah.
hell.
I bought it for. This was something which I bought to go fishing and to take out clients and
Why don't you do that then?
friends.
Just buy loads of boats and keep making
You
money.
could do, couldn't you?
You got lucky there.
Yeah, you don't get much rent on them, unfortunately. So, and I did what you shouldn't really do, and I took that money to buy a boat out of my house because my house had gone up a lot in value. So I sold the boat, and I thought, you know what? Rather than just sort of putting that back into my mortgage, I'm going to use that. I got $250,000 back on this boat. I thought I'm going to use that to buy investment properties and go back down that path. So, and that was, and again, the strategy for me to do that is really looking at this mortgage that I've got on my principal place of residence. I want to have something to take pressure off, the ongoing obligation to pay that down amidst, potentially we're in a very, very low interest rate environment at the moment. And history's told me from having mortgages for sort of 25 odd years that interest rates will go back up. I hope that things have flattened out a little bit more for Australia than they have done in sort of the 90s and even in the early sort of 2000s. But, they're going to go up more than they are at the moment. So it's really a sort of a hedging for improving my lifestyle by helping to pay down that mortgage by generating a large amount of capital growth through the investment properties. And you know what? I'm maybe hanging on to a couple of them to generate a little bit of income further down the track. So that was sort of the overall strategy.
Okay. So, and again, just off air previously, you mentioned that one of the purchases last year was a bit of a larger play, double block of
Yeah.
So talk me through that, because that's going to another level. You've started off with the individual apartments, gone to the sort of resale properties, which, again, just quickly tell me, were you talking 2-bed, 3-bed? What are they?
So I kicked off when my wife and I decided to go down this path. We bought a place in Mango Hill up in Queensland. I used a buyer's agent. Again, sort of wanted to get an idea of, talked about my strategy and get an idea of what to buy with my goals in mind to get a sort of a 10-year. I wasn't looking to kind of necessarily do anything quickly, but a sort of a 10-year sort of cycle. So when I'm sort of circa 60 years old, I'll have this money to pay down towards my mortgage. So went for Mango Hill, got a 3-bedder there. So the next purchase, I bought a 3-bedder in Kalanga, which it was a similar sort of property. So these were sort of circa $300,000 properties. So then last year I went down to Tasmania, and while I was down there, spent some time in Hobart. Really liked the place and kind of sensed that something might be happening down there. This was in 2017. Had a chat with my buyer's agent and just sort of sounded him out to see what he thought about Hobart. And he said, "Yeah, look, things are starting to happen in Hobart." So
Did you said you went down there? What, just on a
on a holiday?
On a
yeah.
holiday.
Went on a holiday.
When you said something was happening down there, what did you sense?
Well, I always take an interest in property. I sort of drove around and I had a look at a few property prices, and I saw things were selling fairly quickly down there. And just anecdotally, I don't know, I just sensed that there was, because the prices there were so much lower than anywhere else. I mean, I looked around and went, this, it's just a fantastic place to live, and it is really comparatively very, very cheap. And there hadn't been a lot of growth in Hobart for a long time, whereas, the rest of Australia or in certain markets have been very, very hot. So, like I say, consulted my advisor. He said, look, yeah, I'm actually buying a few places down there.
Okay.
Bought very quickly, and in Brighton, and that place has, sort of moved. That's probably been the biggest growth out of all of them.
Okay.
So then when I came to my latest purchases, which were 2018, I'd sort of had those three properties. We'd evaluated that we'd got probably about a 20% overall growth in equity over those three properties. So there's a little bit of leveraging to be done there. Plus I'd saved up a little bit more money. So I had a chat with with the buyer's agent, and I said, "Oh, look, I'd be interested in doing something a little bit different." So he said, "Oh, look, a couple of I'm starting to buy on behalf of some of my clients to take blocks of land that are in areas where the zoning has changed." So he said, "Well, what I'll be looking at," he said, "Look, Deception Bay at the moment is an area that is set to have some growth over the coming years. Not immediate, but it's really sort of one of those areas where there is potential." So he said, "Look, what I'd like to look for is a double block." To me, it was a surprisingly small block. We acquired two 400 square metre residents side by side. It's giving obviously a combined 800 square metres. To me, I thought that's incredibly small. Trying to envisage an apartment block on there. But look, you know what? As more properties need to be built to accommodate people moving into those particular areas, then as long as there is a certain metric that will tell you how many apartments you can build on that particular block of land. It looks like you can build about 18 on there, which to me is
right.
You can go up 21 metres in height. Whether or not I would decide to build that many in the future.
So at the moment they're tenanted.
They're tenanted out, yeah. So two houses, one 2-bedder, one 3-bedder.
And what are you thinking in terms of when that development happens? Is that a 5-year plan? Or is it all happening this year?
Nothing is guaranteed in any kind of investment. So what my strategy with the advice of my buyer's agent was to buy properties that had a good yield. So, but with the potential to develop. So this is not a matter of I'm going to develop them.
Yeah, okay.
It's not a matter of I'm going to develop them. I don't care what happens. I'm going to put 18 apartments on there. This is a matter of acquiring 2 blocks in a prime location. A stone's throw from the beach. And as the demographic starts to change and as the properties start to be developed there, you have the scope to either look at once the developments have just started to go in around Deception Bay. But you've got reasonable infrastructure developments happening in that particular part of Queensland. There's a new university that's going up, which is going to be completed in a couple of years. So you've got just various changes happening around that area. So it is an opportunity.
Yeah.
So at the moment, I've got a yield that gives me reasonable coverage. It's not far off break even on an 80% loan, but there is that potential to develop.
With the prospect of developing and building something, 18 units. Does that scare the hell out of you?
No.
Because again, for a lot of people, you buy an investment property, big step.
Yeah.
You then have a period where you may not have a tenant in there for a couple of weeks, and you've got to shovel some money in yourself, and that's stressful. And then you've obviously you've come along this journey, and now there is a prospect of this happening. And for most people, I think of that. I think, bloody hell, think of all the things that could happen and go wrong. Oh my God! So just interested to get again your mindset around.
And that has been my mindset when we bought our first place, in the South Bank. I was incredibly excited. I was also incredibly nervous, and this was a $219,000 purchase with an 80% down deposit, and I went through all that, and then I remember leveraging off that to get the second one, and it was like, oh my God! I can remember sort of looking. So the first one was 220 circa, and the second one was 160, I believe, or 170, and and I remember going, my God, I owe $250,000, and it was just mind blowing to me. And it was sort of nervy stuff. But now everything is relative, and I felt really. But then you build up your tolerance to bigger numbers. The thing is, in terms of this potential development project, I believe nothing is a given. You never take anything for granted, but I believe I've got the experience now I won't be in a rush. if I done this, 20 years ago, it would have probably gone catastrophically wrong because I would have piled in, and there'd be far more potential to go charging in. For me now, I'm patient. I can wait 5 years. I'll just see how, Deception Bay evolves. I mean, it's a lovely area. It's got great potential. I'll just see, and I will watch. What I will do is I'll watch and observe other developers build apartments. I will see how quickly they sell. I will have a look at the type of developments that they create, and I'll see what the demand is. And you know what? It might just go flat. Now, at the very least, then I've got options. I can either hold the properties that I've got. They give a good yield. I can redevelop those buildings and just maybe build, sort of a larger, more modern building on there for a higher yield.
Yeah.
I can maybe sell the block because it is going to be open for development. So you may get another developer that will want to buy a double block off me, and I get a better return on that particular investment. So it's really a matter of holding some cards and having some options for the future. So yeah, I'm not nervous yet because I'm not going to develop yet.
Yeah, okay, fair enough. What's your thoughts 2019? Are you going to pick up more property? Are you going to sit back and wait and watch? Are you going to concentrate on your portfolio that you already have? What are you thinking for this year?
I'm going to sit and wait for this year.
Yeah,
I think I love market cycle changes. I've been through. I've watched. This is probably the third market cycle I've seen in Australia, and every time, sort of in Sydney, you're looking at sort of drops of sort of circa 10%, and these are the times where this is where you make the biggest advances in terms of your investments, because it is a buyer's market, and as an investor, I'm a buyer.
Yeah,
I'm not a seller, so I will sit and wait. I have potentially got some capital in. I've still got some equity in the properties that I've bought, so there's the potential if something cropped up that I could move. I think for me personally, there's no need for me to move quickly, because this is really, again, knowing your goals in terms of where you're going with your property journey is very, very important. And for me at the moment, my goal is really around driving down that mortgage on my principal place of residence. If I was starting my journey, I'd probably be, I think now is a time of great opportunity.
Yeah.
Because unfortunately, you're going to get sellers that are distressed. I think as time goes on, as interest rates start to tick up, there is going to be people who are going to start to panic. And you go through this funny cycle where, to start with, I mean, I see properties, for sale in my local area that just sit there and sit there and sit there, because unfortunately, the people who've gone and knocked down perfectly decent, sort of houses and built massive, great big mansions on them, have unrealistic, that they're looking at the price that properties sold for 18 months ago, and expecting their house to sell for that. And then they list them. The agent can't sell them because they want too much. They go and list them with another agent. They can't sell them. The same people go around the same marketplace and go, "Oh, that house up for sale again."
Yeah.
So you go through this funny cycle where you get this unrealistic expectation, and then the penny drops, and then perhaps the repayments tighten a little bit, and then you get the forced sale. And it's the same for kind of people who've overcapitalized on new builds. Unfortunately, it's the same for a lot of people. You'll get certain circumstances where people need to sell, and that's where investors, who have watched the marketplace, and now is a time to really to watch the marketplace very closely to see what patterns it's worth. If if you're on a first investment or maybe a second, this is a time to really, really, really watch the marketplace. Look in the area that you have your interests and where you're looking to buy. See what properties are selling for. See how far below market value they're going. See how many days on market that they are there for. And I'd also say talk to local agents. Just go up there and talk to them and say how quick a place is selling, because then you'll find this is where the real gems tend to crop up. As long as you've done your fundamentals and you know that there's you're investing in a fundamentally good area that's got longer term potential to grow. So for me personally, no. But you know what? If I had to move quickly, if there was a real bargain cropped up, I'm somebody who makes a quick decision.
Yeah, look, there's opportunities out there for sure. And as always, and as we always talk about on the show, and you mentioned talking to real estate agents and leveraging professionals and obviously buyers agents and what have you to assist in that process as well is vitally important.
Talk to sales agents to find out how properties are selling. Also talk to property managers to find out what the rental, because it's not just about the purchase price or the potential for capital growth. It's also about yield. So talk to the sales agents to find out if things tend to go below market value. Talk to the letting agents in that area and find out what the vacancy rates are.
Yeah, absolutely. Al, we're going to have to wrap things up, but as you said at the start of the show, we can talk property all day. I just want to say thank you for your personal insights on your portfolio. Very interesting.
Thanks, Russ.
Obviously, wish you all the best, and we'll get you back on the show, no doubt, in the very near future. For everyone listening, thanks again for tuning in. Make sure you check out all the other podcasts on the Smart Property Investment Podcast Network. If you've got any questions or queries, make sure you email us editor@smartpropertyinvestment.com.au, and be sure to follow us on all the usual social channels. Until next time, thanks for your time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.